Okay, hello everyone. Welcome to Market Trends. I'm David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. As usual, we're going to start off by showing a few disclosures, and I'm sharing a few other important points in the chat. It's great to be with everyone, and everyone's just coming online now. It's great. All right, so we do this webinar every Thursday afternoon at 2 p.m. Eastern to kind of show some of the abilities of the TradeStation platform, both for analyzing conditions and market trends, and also to find ways to capitalize on them with stocks and options and different kinds of option strategies. You know, it's a very interesting day to come back because it's like we're almost undoing what happened the last time we did this webinar. Last time we did this webinar, the market basically was it was basically collapsing in the middle of the actual webinar. It's pretty interesting. We were doing it right here. This is the S&P, and we came thudding down the big bearish outside day. And at that time, it was one of the Fed governors was talking about, maybe not cutting and all sorts of conversation like that. And of course, since then, we've had a lot more information with things like the CPI report. And we're in an interesting spot here where, there are certain assumptions that when the market started rallying, back in late October, certain beliefs and things started appearing in the market way back here at this time. We were talking about the time about the optimism and then the tightness of the advance. And then in many ways, some of those overall conditions have faded in the last 2 to 3 weeks. Now we actually did, let me actually go here. If you go to tradestation.com, I'm going to show you this. A couple of things. First of all, if you go here to Insights, this blog, this is our blog, and on the blog we have a series of kind of some of the points we want to cover. Our rate cuts out the windows. These are some of the things we're going to cover in our webinar today. So I'll just point that to you. There's also a download available here, and you guys can basically see some of the points we're going to cover. Although, things are evolving in interesting ways. We had some interesting news on AI this morning from companies like Amazon that are kind of just emerging. So before we even get going, I want to go here to our workspace called MT Main March of 2024. And let me first start off by showing you guys some standardized returns because I might talk about some of these ETFs. Now, this workspace has a series of different tabs on it. You can see down here at the bottom. Let me actually hide myself. And basically, what is interesting is that we can go and then add the S&P 500 or other big indexes to this. So just to make things kind of smooth and to have some things to talk about, I'm going to go over here to earnings dates. And I have Alphabet on there now, but I'm going to go ahead and I'm going to go to data, add symbol list S&P 500. I'll let that run. It's going to populate. Now I'm going to go over here to the price grid. I'm going to go to, let's add for this, let's just add the NASDAQ 100 to price grid and MA tools. Because some of the things we're seeing now, there might be some interesting signals that kind of popped up in the last couple of days that I wanted to mention. So overall, as I look at the market now, I think what's important to realize is that there are a lot of signs of momentum slowing. However, that doesn't mean a huge amount. We had something like, I think 4 or 5 straight months of upside. Now we're in our first negative month. And if you look at it, there's something of this trend line that we've broken, but we emphasize, yes, in our report this morning, this low from back on, I'm sorry, that actually was not April 8th. That was April 4th. I want to correct what that says there. Let's go here to the S&P. We'll look on this chart right here. This was April 4th. I apologize. The April 4th low was the key number. So basically, you can see how we came down and pretty much just held that level, and we're not able to move below it today. And what's interesting is we often kind of see, this is the way I've seen the NASDAQ trade. I'm going to just open up a new chart here really quickly and show you just like a kind of intraday, like 15-minute candles on something like the Qs. All right, so now we look at the Qs and we go to like a 15-minute chart. We can see it do certain things like this a lot, when it will basically squeeze lower and then fail to break and then explode higher. So this was that big outside day. We came down, held near the bottom of it yesterday, and today we held above. We didn't even go back down. The S&P did, the Nasdaq did not, and that gave an interesting signal. So I mean, this is a sort of very short-term tactical thing. When I look at the market overall, though, I do think it's important to realize that there are some patterns forming that are potentially, not very bullish overall. And I think the main thing I'm looking at right now is a TNX.X, which is a 10-year. And wait a second, this has not. All right, there was a pricing issue with this. I'm going to go real quickly to Trading View. There was some data issue popping up on this. I'm going to look at this Trading View chart because, in fact, I'm going to look at this chart because this one has some important things on it. You can basically see here that the 10-year, and we've been talking a lot on the 10-year at this level on the weekly. So if we look here, there's a level right around 432 on the 10-year. There was a peak back here in October. It actually goes all the way back to 2008. But you can see how we kind of tried to stay below it in February and March, and now we've broken back above it. And to me, this is like pretty much a big thing we want to at least be aware of, because if you look last year, when the market started weakening, especially back here in the summer, you can see that we had the yield just inching higher, and then it really accelerated. So I think right now we had a set of bad items that were kind of coming and hitting. We had yesterday the CPI was higher than expected. We also had a bigger than expected budget deficit, which means the government's going to be issuing more debt. And we also had a bad auction for the 10-year Treasury. So those things all came together. And it kind of shows right now that we are in a spot where treasuries are a potential risk in the market. Another thing is if you look at the euro right now is at risk of kind of breaking this kind of level. The European Central Bank today said that they are kind of looking to be cutting interest rates, and the Fed is moving in the opposite direction. So this is something that is also a little bit of thing on people's radar. To me, the main thing though is to be looking at that 10-year Treasury and just to kind of keep an eye on it. This at this point is something of a worrisome sign, but at the same time, we're looking at the stock market, we're looking at things like the Nasdaq, we're looking at big major technology stocks like Nvidia and companies like that. And when you really look at it, at this point, this is not necessarily something that marks the end of anything, but it is something that we, I think, need to be aware of. And if we continue to see this kind of upward pressure in the 10-year, it's going to be something that weighs on people more. As I look out at kind of the way the calendar is right now, we might have a grace period right now in the market, because when you look at it, we're going to be, look at the upcoming events. None of these events are, important from a macro perspective. We basically have earnings start off tomorrow. We have retail sales, retail sales, housing starts. These are not going to move the market overall unless something really strange happens. But then we really have to get all the way into later in the month. We're going to get the GDP report, and then we have the Fed meeting on May 1st. And in that time, we have a bunch of earnings. So let's actually go over here really quickly back. We've been loading the earnings. Let's go back and look at what this gave us now. So what I can do is I said, let's only see those stocks that trade lots of options. That's one of the things we like to do. So if a stock doesn't trade at least, say, 50,000 contracts a day, let's just block it out. So we're going to go here to data, add label row. And now I'm going to go and sort them by date. I'm going to see so we have Citi reporting tomorrow, JP Morgan, Wells Fargo. Those are the big ones we see, and then we get off to next week. So what's good about this is we can kind of start to see now and to be trying to plan and look out. And what we can see here is that if we sort by market cap on this list, we can see that we might have everything except NVIDIA. No, we do have NVIDIA. But yeah, that's going to be, NVIDIA is after the Fed. Apple is going to be after the Fed. But then before the Fed, we are going to have Amazon, Meta. Tesla is not as important on earnings because they tend to move on deliveries. But we're going to have, we're going to have Microsoft. We're going to have, Google, Amazon, Meta. So right now, when you look at it, if the macro, concern is going to become an issue, we could have a grace period until after those companies report earnings, and then we can turn to that Fed meeting on May 1st. So I want to just kind of point out that we're in this sort of spot in the market here where it's a dead period, and it's a dead period of events that typically are more positive. So, I think if today's PPI report had been hotter, we might have been trying to test to the downside a little bit more. But overall, I think it's important to realize that these events coming up are generally are generally something historically that have had a net positive to the upside overall in the market. Now, last week we were talking about some potential options activities, like with Apple. We were talking about, people might be thinking about doing something like selling the 170, 165 put spread in Apple, and that was something that if people had done, it would have more or less held that level. And now it's rebounding off it. What's interesting here is I actually saw an article today. I think it was here in Seeking Alpha, and it actually said that people are getting, institutional investors are starting to get interested in Apple again. So this is just another one of these interesting things. Now we've been talking about this level, and one of the key points that we had been kind of, considering was the fact that is Apple going to break to new lows? Maybe. Are they going to do it before earnings? Maybe not as likely. And the reason is earnings are liquidity events. There are times when if the market's going to move and do something, they often will do it around things like earnings. And if you're looking for a big breakout or breakdown, one of the most frustrating things is looking to be positioned before that event, and then basically it drifts in a meaningless way before you actually get the move. And I think that's one of the points we were trying to kind of capitalize with that options concept last week. The idea of selling a downside put spread in Apple was the fact that if there was going to be a breakdown, earnings was not going to be, before earnings did not necessarily make sense to be looking for that. So some of the other ones we were looking at PayPal, for example, you're talking about, the potential of, selling the upside in that, and that's kind of working. It's just kind of stalled at this level. I think we were looking at something like, selling the 60, I think it was a 67, 69 call, selling the vertical call spread above, looking for the stock to remain under 67. So those are some of the things we were looking at. There were a few others with McDonald's and Dollar Tree that also were kind of moving. So today we want to look at some other potential sort of things people might be looking at. And, when I look at the big technology stocks here, from the options perspective, I'm not as clear on any, real clear opportunities necessarily. What is interesting today, I'll just mention, is one of the tools we have is with the Keltner pullback tool. I want to just mention this because this would have worked very well. People have been looking at the Keltner pullback that we have in radar screen. Look here at something like NVIDIA. It went right down, touched the Keltner pullback, and rebounded. If you'd been looking at NVIDIA in the last two sessions, you would have seen that. So again, this is just one of these tools that we have built into the workspace. I'm going to go back to it in a second. I want to just point out this bounce that's happening as NVIDIA is happening near the bottom of that line. Now, in terms of some potential things today that were grabbing my attention was, Schlumberger. Now, I mean, this is a company that we might not think about a lot, but it's a major energy company. And, right now we're in a situation where energy inventories remain tight, and people, I think when you look out into the future, the people are starting to move toward energy again. I mean, energy is actually the top performer this year, and there's a company that's kind of just sitting and coiling, and they report earnings win on the 19th of April. So I looked here at Option Station Pro. Now, say for example, a person was looking here at a name like Schlumberger, and look at how it's just sitting and consolidating here with earnings coming up. You can see that it's kind of holding above this level from back here in December. And we also have a potential, top of the range up here around 62. So it kind of grabbed my attention that a person might think about something like the 56, 59 call spread. This is one that kind of popped up. So a person could, for example, for educational, purposes, you could click here on the ask on the 56s for 45 cents. And if a person held down the control button and went over here to the 59s, you would see that it basically creates a call spread for 32 cents. So that's something that is potentially, $3 wide, and it costs 32 cents to open, which means it's potentially looking at something like a kind of 800% return if the stock were to jump to 59, and where it is right now 54. When you consider something like earnings, something like that is not, completely impossible. So from my perspective, this is one of these things where it's a name that has, worked in the past. If you look at it historically, it's had some interesting moves on earnings previously, like some of these other moves. I don't have time to add it to the chart, but this is a name that has historically worked before. And I think it's important to realize when you look at the energy sector overall, like XLE, we can see it's actually up near all-time highs. It might actually be at all-time highs here. And then look at something like Schlumberger, it has just kind of sat. So, if we're in a situation where the economy is expanding, oil inventories are tight, something like Schlumberger here is something where I want to kind of point out some with some potential risk reward. Now, another one that grabbed my attention, which reports even sooner, is Goldman Sachs. They report on Monday. Now, Goldman here, had this incredibly tight price action in this rally, and now here it is pulling back and pretty much retracing that. So in a name like Goldman, I was looking at like the 410, 420, just going back up to that high, which is right around 420, something like that. And we're also looking at the expiration for next week, which is the 19th of April, and something like here at the, I'm going to click on the ask at 410, and then I'm going to hold down control on the 420. And see that spread is about $2.06, which means if the stock goes to 420, that will be worth $10. So that's more than, basically more than 3-to-1 risk reward. And that's another one I want to just kind of point out. When you really look at a name, how tight this name has been. It's been incredibly tight price action. And, we're in if we are still in a secular bull market, if the most recent inflation data hasn't kind of destroyed that narrative, then we're in a situation where a company like Goldman, which has exposure to IPOs and securities and everything else, could be in a sort of interesting sort of spot. So I wanted to mention that one. Now, another one that we've looked at a lot is Netflix, and Netflix has more or less pushed higher, as we've noticed. And the thing about Netflix that's interesting to me here is again, it's in a tight sort of spot, but it has also a level right around 700. So a person might here look at Netflix, something like, the stock right now around, 630, and you could even look potentially at something like the 650. Now, again, we're also looking at the expiration for the 19th. And the reason why we do that, you can look here and see the next earnings date is the 18th. So we're targeting the expiration around earnings. And if we look here, if a person was to click on that 650 and look up to the 700s, hold down control, a spread like this is a little more expensive. It's like $13 for 50 wide. So it's also about 3-to-1 risk reward, $13 for potential upside of $50. Now, I want to just kind of point these out because these are the sort of things that pop up all the time when we use TradeStation's award-winning platform to anticipate things like earnings, to plan for earnings season, to look for opportunities in the market. These sort of things just tend to pop up. I did also want to mention, well, we'll get to that in a minute. I want to go back now and look at some of these things just to kind of show you guys how exactly this works on radar screen. We can see here that we can really look for those companies that trade a lot of options. Now, this average options volume tool that I have here, it's one of these custom tools I've created for you guys with with easy language that is part of the zip file I share. But if we click on this, we can change to change the threshold. By default, it goes to 10,000 contracts. Let's change it to say 50,000 contracts. And now what's interesting is you can see that we're still showing those, but now I might want to sort by something like the date. Let's just look day by day for opportunities, and you can see here that some of these names. Well, actually, I already I changed that. But the thing is that you can kind of see which names are going to be more active than others. It's just a quick little tool I wanted to share with you guys because it allows you to screen out those companies that don't trade a lot of options. If I change it to like 100,000 instead, you'll see what I mean. We're always looking to use the platform to make things simpler. There's so many things happening in the market at any point in time. And it becomes so easy to get distracted, to get frustrated. And I have found emotion in trading for me is not just fear and greed. It's also frustration. I'm trying to find this, I'm trying to find that. My computer is slow, I'm busy, I'm distracted. And then those things can make me rush, make me make mistakes. It's not always fear and greed. It's often just kind of the frustration of navigating the market and of different things. So if we can leverage a TradeStation platform to anticipate and to plan things, it's another thing we can put in our favor to kind of, be ready and to hopefully keep us from making mistakes. So anyway, I wanted to just kind of point out, now you can see I changed it to 100,000. Now you can see there's certain certain underliers here that are no longer highlighted. And you can see the stocks that trade a lot of options versus not a lot of options. So I was just looking at some of the opportunities coming up And this is kind of what, I had noticed, the ones I had mentioned. Now, it is interesting also, I want to mention, is a lot of things in these semiconductor related names. And in particular, AMAT, oops, wait, I'm going to close this now. These are the semiconductor suppliers. But if we look now at, I want to look at Applied Materials. These companies are incredibly tight price action here. And what's interesting is we can see this gap, and look at how it just has held. And if you look at this, the stock has not made a new high really in over a month, since pretty much back here in early March. So you have a very tight sort of period of price consolidation here. And what's interesting also is you can see we had this same big outside day. And so I think right now when I look at these, people for looking for kind of continuation, the ones that immediately spring to my mind are potentially AMAT and Lamb Research. You can see here that they have this pattern of extreme tightness with like this falling trend line. They're holding above the 8-day exponential moving average. They've really had very little pullback here. And the things that are always interesting are to see things that have very little pullback. The tightness means there's not a lot of sellers. And I think that's an important thing to realize. LRCX is a very similar sort of chart pattern. And people might be looking at this as just kind of saying, from my perspective, you might see something here of this line, and then at the same time we also have this low. And if someone was to close under that low, that is potential for a risk management area. And I think it's important to realize that it's those closes under that low. Is it able to, or is it not? And the fact is we have not been able to do that. Closes speak louder than words. And I think right now these are in a spot where they have a potential risk management level not terribly far away. They have an established uptrend, and they have some resistance that they're trying to break. So these are some names that were grabbing my attention that I did want to mention. All right, now let's look at some of the things the market tells us overall here, because we use radar screen to identify areas of strength and weakness in the market. And here's something that's interesting. Look on a year-to-date basis. What do we see? We actually see that energy is now the top performing sector this year. Now, some time ago, we had gone on market trends. We had talked about the building, bullish, catalysts or conditions that have been building in crude oil and in the energy space. And a lot of those have now been, kind of expressed. However, at the same time, there isn't really anything suggesting that it's ending. And what's interesting also right now is that this week we had inventories were higher than expected, but the market is still in the situation right here where it's a tight petroleum market. We have demand for summer driving, and all those conditions are in place. And with the economy in expansion, I think it's just important to realize on a year-to-date basis, energy is now leading. It's outperforming everything else except semiconductors. Look at the S&P 500. Let's go to our price grid here, and this is on our MT main, and I actually have I have the Nasdaq here. I could go down here really quickly. I'm going to go down and I'm going to add the S&P 500. It'd be interesting to see on a year-to-date basis what is the top performing member of the S&P 500. I haven't done that yet, and let's see. This is sort of stuff that is so easy to do with radar screen. And on a year-to-date basis, NVIDIA is the leader, CEG, General Electric. But look, here's Micron. Isn't that interesting? Meta outperforming on a year-to-date basis. But also we have a name in there like FANG, which is Diamondback Energy. Now, last time we talked about SU, Suncor, the Canadian oil company. And so I think right now, we're in a spot where the oil and gas names have rallied, and there could be, they are showing signs here of kind of pausing, but there could be people looking for some continuation in these. So some of the ways we can be anticipating this, the same thing we said off the bat was something like NVIDIA. It went down and hit the Keltner channel. So how do we know when that happens? We can look here on our Keltner pullback. So if we click on this, we can look now to see which company is going to come down. And if it says 0 more or less on the Keltner pullback, that means that it's at the bottom of the Keltner channel. So right here, I mean, MetLife, I haven't looked at this stock in a long time, but let's just look at, see, it's touching the bottom of the Keltner channel, so it has a 0. So right now, and if it's under the Keltner channel, it'll be a negative number. So I don't know, some company here like I don't know, global payments is under the Keltner channel. I mean, it's just an interesting sort of thing. But I think the key thing is for planning and anticipation. If this is correct that we're in a spot here where energy will continue into the spring and summer, but it's near term overbought. The way to start anticipating and planning for that is to potentially be loading some of these energy names into radar screen and waiting and monitoring it with something like the Keltner pullback indicator that we have included in the zip file that we shared with you guys. So that's one thing I wanted to show you. Now that those things have happened, let's actually take a look at some of the big sort of technology names here, or at least let's look at the NASDAQ 100. One thing I like to do right off the bat is look for companies with a 20-day moving average is above the 50-day moving average. It shows you still have an intermediate uptrend. So I'm going to go down. I'm looking at the whole NASDAQ 100. I'm going to just go and I'm going to block out the companies that are, I'm going to add a label row. So now I have 55 companies that have that condition in place. And then I can just look at them and kind of look at, sometimes when the market's been consolidating, you might want to just look at companies that haven't done anything for about a month. So you can just look here at companies that are essentially flat in the last month. And what might this tell us? Again, you see some of the names that are kind of rallying today are names that have been kind of flat to down, and they've been just kind of drifting sideways. And I like to look at this just to kind of look for opportunities, because you can see here, KLA 10 Core is another one of these semiconductor suppliers that has just been going nowhere. Also, that same sort of falling trend line. So the thing is right now, if we're in a spot where the inflation monster doesn't come out and make everything problematic, and then we're at a spot where people are going to be thinking about maybe we have continuation. Well, when you have that in place, here you have a name that has moved sideways, and it's basically just moving sideways, but it has that longer term uptrend. So this is some of the ways I like to use the price grid. Another way we can use price grid is a look at stocks that have recently hit a 52-week high. So I look at companies here that made a 52-week high in the last month. So I'm going to click on high, and I'm going to block out everything that has a value greater than 21, because 21 days is about a month. I'm going to add label row, and then I can just look here and sort by something like 5-day, and this is going to now show me companies that recently made a 52-week high that have now pulled back. Now, Fastenal had a bad earnings report today, but with things like earnings, you have to be aware of that, which is the reason why we have that other thing for earnings. But look at another name like CDW. Interesting. Also, 50-day moving average down here at the bottom of the Keltner channel. These are the sort of things that people might be looking toward. Also, it's interesting to see a name like this that reports earnings. All these tools allow you to be prepared and ready. You can see right off the bat here, it reports earnings on May 1st. We have all that data right there available for you guys. You can also see right off the bat, well, these don't really trade a whole lot of options. That's why we have our threshold set on average options volume. It immediately highlights. So if you're looking for the names that are liquid, you can just ignore those and just go down and say, oh, what do we have? We have Micron, Meta, and this allows you to just kind of spot those right off the bat. That's the reason why our average options volume is set to do this highlighting when things are at certain thresholds of options activity. Now, I also want to mention that we had recently talked about Broadcom. After Broadcom reported, it had bled lower, and we had also kind of, at the time it came down to the bottom of the Keltner channel on this webinar, we had also kind of said this is something where people might want to also be thinking about selling put spreads. And the reason why we said that was that after the big event happened, the movement was fading. It wasn't that it was bearish, it's just that it was pausing. It was not moving up or down, it was just in a period of sideways movement. And when things are in a period of sideways movement, traders might not want to be shelling out their hard-earned money to look for movement. Instead, it can make sense to be thinking about collecting premium. And that was something we had kind of mentioned in a name like this. So I think it's also important to realize that, depending, it's still kind of far out, but for certain things with earnings season, you might have companies that had rallied on strong earnings, and then they kind of report earnings and they kind of just pause or stall, pull back a little, and then waiting for after that, letting them kind of come down and cool off those can also offer opportunities for selling puts on them. Now, this is one we had mentioned at the time at Broadcom because this was the report here. I want to just kind of mention that how this approach is something that can make sense, but it really makes sense to look at a stock and to try and identify things like, is it now in the short term accelerating or is it stalling? And right now, you could see that this one had been stalling. Now we're at a spot though, maybe where it's going to accelerate. And why do we say that? Well, look at this gap. And I can't remember what day this was. One of these companies had some kind of good news and it just gapped up and held. And look how it's gotten above that 21 exponential and held. It has basically held this incredibly tight range. Broadcom, the overall chip space has all done this, right? Oops, wait a second. $ SOX. So you can see how it's just been in this incredibly tight range. This is the Philadelphia Semiconductor Index. So this whole thing now, I think we have to remember is the leading sector, the leading industry, the leading group in the market on a year-to-date basis. We can see that over here from key ETFs. If we look on the year-to-date, you can see that semiconductors, the SMH, is the top performer by a long shot over everything else. It's interesting to look at how SMH has been doing well and things like software have not. Inside of technology, it's interesting. Even now, technology is starting to show some life today because Apple is coming off those lows. So it's one of these things where in a bull market, things just kind of come to life. And this is kind of what we had kind of thought might be the case in Apple, and it is playing out. So, all right, let me just. So I want to mention here that I think it's important for us to be looking at this April. Oops, $ SPX.X, the April 4th low. That to me is now a really key level. One of the patterns that we saw forming a lot in the market was things would go down and hold weekly lows. This level, I'm going to actually go over here and turn the S&P 500 into a weekly chart. This is just a cash index. Now, look at this weekly low. This is now the weekly low from the week ended March 22nd. And it's interesting to see how we're just holding that. Now, we at different times had talked about, and one of our articles here, I think it was this one, we talked a lot about how this index has held tight weekly lows. And let's see, it was this one. This article here, it was the one we did on the 8th, which was Monday of this week. You can see how it just held lows. See each of these? And this was the level we were looking at here. It was exactly this low, which was the one from, it was this on the weekly, it was this one here. So I think it's important to realize we've talked about this pattern a lot. The market moves sideways right there, holds a weekly low. Let's just look at this. I'm going to just draw a horizontal line really quickly. Holds a weekly low right here. Holds the weekly low. See, it cut under, came back. There were others right here. It was interesting at the beginning of the year, there was this weekly low from December 22nd, and we held it early in the year. And then the market was just from there off to the races. And in many ways, the pullback we had through today was the deepest pullback since that time in December. There's some different metrics that I don't have readily available, but if you look at things like the amount of oversold that we were on things like RSI, we actually were more oversold on RSI. But if you look at some other things like how far we went below the 10-day moving average, a lot of the measures of being oversold. This is the most oversold this market has been in a while. Look here on the MT blog. This is just another workspace I work with, but you can see RSI really got down to right around the 50 line, but it's kind of holding there. So I wanted to just kind of point this out, that this is a spot now where there are some kind of tremors, but it's not clear that it's really anything that can expand. And like I said, I think when we look at the calendar, we realize that they have something of a grace period here, that unless something, kind of unexpected happens, we're in a spot here where we have, a good chunk of catalyst coming that the market at least is going to feel positive about these big technology earnings that are coming out before the end of this month. And then we have the Fed. And I think it's just important to realize that, you know, if it's sell in May and go away, who knows? But the thing is that May 1 is that big event. And until then, unless something, geopolitical happens or something really strange, you can kind of see that we have a decent chunk of time here in April. Now, another thing, I did want to just quickly mention some of these things because I think it's important for us to know about these, even if they are not necessarily, fatal at this time. Basically, the 10-year Treasury, this was a bad Treasury auction they had yesterday. It was the worst in a long time. The federal deficit was wider than expected, and the CPI was higher than expected. Now look at some of the numbers in CPI, and some of these things are troubling as well. When you see things like insurance going up, see things like medical care, these are potentially structural things that the Fed is not going to be able to stop with higher interest rates. So now I think we're in a question of the bull markets climb a wall of worry. And the thing is that will these simply be part of that background noise as part of any bull market? It's entirely possible. And there are certain aspects of this market technically of how it broke out that is really unique relative to history. We said that there's real similarities in 1995, and that has more or less remained the case. We got a little bit more of the weakness that was developing, but then we come up with some catalysts I'm about to mention, and those things kind of dissolve. So at this point in time, the market is kind of consolidating here, and that April 4th low is becoming really important. I'm just looking over at my other screen at what's happening here. So it's interesting, the wider budget deficit, and I'm going to just very quickly mention what the negative dynamic could be. The thing is that if we're in a situation where the government, has to borrow more, that increases the amount of Treasury supply, that pushes up interest rates. But then the higher interest rates mean the government has to spend more money on interest payments, which then increases the deficit, and it becomes potentially a kind of dangerous spiral of higher taxes, higher deficits, higher rates, and all those things. But that's the worst case scenario. And I think it's important to realize those things can kind of simmer in the background for a long time before they really become an issue. And, right now, I think we need to realize that that is a threat that's in the background, but it's not right now the dominant thing. The dominant thing is the fact that Microsoft reports earnings and Meta reports earnings, and these companies, are reporting earnings. And the other thing is that we really don't have another catalyst until GDP on the 25th, and then we have May 1st Fed. So basically, right now, if we are going to have a meltdown over something like inflation or something, or higher interest rates or something like that, the calendar doesn't lend itself to that in the near term. The Fed people have come out, the different speakers have made a lot of hawkish statements, and that stuff has not panned out. So now we're kind of back where we were, of holding a tight pullback, holding a recent weekly low, and people focusing on AI. So speaking of AI, there's this one, I think. Basically, Amazon is talking about some new opportunities in AI. It was kind of interesting. And I thought it was interesting they're talking about things like satellites. I mean, to me, Amazon is just a fascinating company. I mean, it's one that at different times, I've looked at, and it's just amazing. We at one point had been kind of looking at the name we had mentioned, um, Amazon, Microsoft, Meta, and Netflix in some ways is kind of like, of those old kind of tech names. Those are the ones that had kind of been performing best. Now it's kind of changing. Now we're seeing Alphabet come back to life, even Apple coming back to life. So I think that dynamic could kind of change. We had kind of said there were like the four strong names, and then the troubled trio, so to speak, which was Tesla, Apple, and Alphabet. But now even that's changing. I think it's important to realize here that Amazon, I mean, I'm not a historian of business, but the fact is I've looked at a lot of companies over the years. I cannot think of any company like Amazon. I mean, they started off selling books, became an e-commerce giant. They basically invented cloud computing, and now they're becoming like an AI driver, and they're going to be launching satellites. I mean, what, 25 years or something? Look what this company's done. 30 years of history. I mean, they've evolved more than some companies might do in a century. It's just an amazing, sort of story to think about. And at this point in time, when you look at it, wow, new all-time high today. So when things break out to new all-time highs, you know, there's often kind of continuation and follow through. So I think at this point in time, this strength that we're seeing here in Amazon has really been, I mean, to me, it's really standing out and being pretty interesting. So for Amazon to be announcing this, it shows that this AI story just continues to widen. And I can tell you, I don't know how much you guys ever, some of you guys I'm sure code, but you know, I've had sometimes to just code certain things, with different kinds of software, whether it's PHP or Python and stuff, for easy language for TradeStation. I'll tell you, if you guys want to do any kind of experimentation or coding with TradeStation's easy language, Chat GPT knows how to do it. AI is something that can really help you kind of, make more out of technology that's there, and the opportunities of what it's going to do for people's productivity, I think, is amazing. But I have just been continuously amazed by what I've been able to do with, with AI for coding purposes. And I think that's just something to, it's just, it's a big deal, and it isn't fading yet. And those earnings are coming for some of these big names. So, all right, let's take a look at some of the other things that are out here. I'm just going to go through these. All right, so the Treasury auction was bad. We mentioned that. So we told you the negative things, the budget deficit. All right, Nvidia and Qualcomm. So now we have more estimates. They're boosting estimates on China. Now I think it's an interesting dynamic, and I'll give credit to Bloomberg for noticing this. Bloomberg noticed some time ago that the sanctions being placed on China were actually bullish for semiconductor companies, because it basically meant that they were going to have to build more of their own facilities. And Bloomberg at the time had identified AMAT Lamb Research as the big beneficiaries of that. So I did want to just mention that, the it's possible that something like these sanctions will actually ultimately prove to be a positive for the companies, because it might simply mean that there needs to be more factories around the world. I'm just looking at this. It's just interesting. I remember things and you see them come back to life. But this is a note today from KeyBank. So basically, at this point, we have the idea of rate cut expectations moving further out. And, I think it's something we have to just kind of be aware of. Bull markets climb a wall of worry, and this might be the worry, that basically, we're not going to get the rate cuts. Inflation's going to come up, and it might not pan out. And who knows? Maybe these expectations of things like shelter cost, or those things that have not come down. We're supposed to see shelter costs come down. It hasn't happened. Instead, we've gotten more inflation in these other areas like insurance and stuff, and that is a concern. But the thing is what happens if it just takes another month or two and then it starts to happen? So I think it's important to realize that, bull markets climb a wall of worry, and this could be one of those issues in the background. There's this idea of this super core inflation with the Fed and everything like that. But another thing that's important to remember is that it's not clear that higher interest rates really do anything against the major technology names. It is a problem for, financials and things like that. It is a problem for small caps, but the major growth names are not really impacted by it. So I think it's just something here where, this is going to be something people talk about, and maybe it simply takes more time before it really becomes an issue. All right, let me see. So here we have a survey showing British companies plan to increase prices. I'm just mentioning these things. I think it's important just to remember that, this inflation thing is kind of brewing in the background, and I would say that when you see negatives, they can kind of sit in the background for a long time before they really become operative. And that's why I'm pointing out that thing about the idea of May 1st. Right. So this is interesting. Fastenal. I'm not sure about this. I mean, for me, from an industrial perspective, I am a little bit, at this point, not as sure about things like some of these industrial names and stuff. It's just they've run so much, and a lot of their valuations are actually pretty high now. So, we had been talking a lot about the strength in industrial stocks. Take a look here. There's a weekly chart, but look at the XLI, the industrial ETF. And this thing has really had a pretty major run. I'm going to change this to something like a 5 year, you can see. So I think this is another thing here that might have with earnings and everything else coming, this might be something here where people might be looking for more of a pause in something like this industrial ETF and some of these big industrial names for now. I would just be wary because Fastenal is a supplier for the industrial space, and for them to be giving an issue, a warning like this, it might be something that's just a little bit of a canary in the coal mine. I mentioned this about Apple. I also want to mention that we did a report back here on March 19th when we cited a lot of these forces that were at work in energy in the inflation story. Things like crude oil advancing, things like the higher prices for rent and lumber and metals and things like that. All those things have more or less kind of panned out and been an issue. And I think we might actually want to think about in a few weeks if some of those trades come back. Like I said, for example, some of these energy names that have run significantly, those could be things that people want to come back to at a certain point in time. But again, with the big tech earnings and everything else coming up, that's going to be the focus for people. All right, let me see here. So ECB planning to cut rates in June. Um, Really an interesting sort of situation we have, and I I, I don't trade currencies, but I mean the Europeans are setting up for potentially some downside in the euro because if you think about the euro here, I mean this is really a level that goes back to December, and if you look at the euro in like a long term like weekly chart, you can see we have these converging lines that it's breaking here to the downside potentially. So this is something that is not terrific for the market overall. And I think we're going to have a little bit of a debate as to whether the euro is going to crash or whether the ECB is simply the first of the central banks to cut. And that's, I think, something to watch. It's not that clear yet. I do think it's important here just to realize this is what's happening. But now let's take a look at I just want to mention this is just it's possible that this is going to be the concern this breaking triangle in the euro. Um, but it really comes down to it again, the big tech earnings and everything else coming like that. I'm just looking right now at the conditions that are out there that might be something of a risk that will pop up. Now, I'm trying to see if there's anything else that really is some of my points here I want to quickly hit on. All right. Now, I did think it was interesting. We were looking for potential signals yesterday, and these are some of the ones that came up. A name like Yelp. Now, with higher interest rates, I think this is an area now, and I would mention if you look on our rundown here, next week we have the housing numbers. And, I think right now, housing, if you look at something like the ITB, this to me is, potentially a problematic area. And I think that, we've had a lot of optimism in terms of housing and stuff like that, and right now they've sold off pretty well. But this might be something here that people want to be, thinking of, not being as optimistic about going forward when you consider the trajectory for interest rates. And I also point out that the XLRE, the Real Estate Investment Trust here, these guys have. They're trying to hold on to this level here, the XLRE. And I want to just kind of point out if interest rates continue higher, and of course, this is all based on what I said about the 10-year, but if we get to that point when the 10-year keeps moving higher, I think we want to kind of be watching this level here in the XLRE. It could hold and hold, and then it could just break lower. So this, I think, might be one we want to kind of keep on our list. Some of the big names in the real estate space are things like, American Tower. These stocks right now are showing signs of continuing longer term downtrends, and they've kind of really had something of a move to the downside. But I think we want to be kind of remembering some of these names, things like housing, could be decent for a little while, but then as we get back to a period of potential risk with interest rates, people might come back and sell them some. So I'm just going to put these names out there as the potential things to watch. But I did think it was interesting to see this sort of pretty significant sell off in Yelp, rallies back to the 50-day, and now it is potentially setting up for some continuation to the downside. Um, Yelp, well, that was Yelp. And Hewlett Packard, I'm sorry, HPQ is also here. When you look at this, I'm looking at these highs here on the weekly chart right on 31, the way it's trapped here. And this is one that, from my perspective, is also, in a longer term, um, it has not really participated at all in the upside, this year. And this might be another name here that we want to potentially watch for some downside potential. CVS Health is like Walgreen Boots. These companies are really in a problematic spot, fundamentally, and CVS is another one here where I think, when we look at this, it had a bad earnings report. I think that was a bad earnings report. There's been issues right now with these companies between CVS and WBA together, but a lot of these health insurers right now, there's been some political risk in them. And with the election and everything else coming, these might be some where they stay kind of heavy. So I want to kind of just mention that there are some things that are in downtrends. And sometimes when you're in a bull market, the stocks that are performing to the downside will give relatively steady downtrends because they're clearly, there's a clear trend in place. And I think it's interesting right now, and you look at something like CVS, when you look at the way it gap lower and then, basically, is, pushing lower here. It's under the 200-day moving average. This also might be something now where it's oversold. It's way under that Keltner channel. But a person might think of something like, for example, going over here to MA Tools and then saying, like, you know what, CVS, if it touches that 8-day exponential moving average, it'll light up here on EMA test. So look here, if something like Take Two, I click on Take Two, it says 8-day EMA, it lights up on my radar screen. If I look at the chart here, you can see it's touching that 8-day. You can't see it very easily. It's the blue line on my chart, but it's touching that 8-day exponential. A person might also set something up the same way with, something like CVS. All right, I'm going to now continue here, with some of the other. All right, let's go now to our MA tools. And let's just look for things now that are bouncing at the rising 21-day exponential. And what do we find? We find ASML. That's another semiconductor name. We can see here Broadcom, Lam Research, and Netflix. So all these stocks now, these are sort of a sign that the stock hasn't gone anywhere for about a month, but it has an uptrend. So these are just some of the tools that are popping up that are kind of interesting to me here. And I think, again, with earnings season coming up, you can see these names. Now, you could, for example, also add the next earnings date to this if you wanted. It's over here on the earnings date tab, but this next earnings date study is also available that you could add, and you can kind of mix and match. You could add things like Keltner pullback or the moving average test study, to the same thing with earnings dates, so you can also compare them that way. All right, let me see if anything else on my list I want to show. All right, RTX. How do I feel about RTX? Well, it's interesting. This was a name I looked at, and it was interesting to me because, they had Pratt and Whitney had some product problems, and they more or less fixed them with this last earnings report here. From my perspective, this is an area where, we're likely to see, you know, um, spending on, military spending. I think with all the things happening in the world and stuff like that, and a name like this now is extended, and I think that, people might want to be thinking about this one needing more time to consolidate, with earnings coming up. So something like earnings coming up here on the 23rd, I think when you consider the extent to which it has moved, it might need another quarter or so before it breaks out. It does have the comeback in effect, but at the same time, it has moved considerably here off these lows. Okay, I'm looking here. All right, let's see. I don't think I have any other questions here. I'm going to now. If I really have many other points I wanted to make. This is just one of those days where basically, we held, like I said, the key thing is that April 4th low. was really a big deal. And that was, literally we did the webinar last week. And as we started the webinar, one of the Fed governors came out and started talking hawkish, and we went thudding down, and we were more or less trapped in that. Let's actually see where we stand now, if we're still trapped inside of that. See, we're still trapped inside this range here. And from my perspective, it's not really clear that the S&P is going to necessarily do much right now. I think when we look at this, it could be a case simply of focusing on some of these big technology names. Um, I'm just kind of watching this for any clear signals. And we look at the market here, though. I mean, it's interesting because we have not gotten back under. The 8-day exponential moving average is still above the 21-day. This might actually be. I had to figure out what signals I'd really look for here to give many more points on this. This might simply be a decent 2-week pause, with continuation. So I think the key thing we look at this here is I got to say that we're holding that low and we're back above the 21-day. And now when you look at these other signals, we're coming off that oversold, not oversold, but we're definitely no longer overbought. This could be a spot where there are no sellers. And I'll tell you, the trend in this market has been there are no sellers. And we see that from things that we've talked about, how the significant amount of cash on the sidelines and things like that. So at this point in time, we might be at a spot where the worst of these sort of fears have been priced in for now. But don't forget about what we have, like I said, with May 1st and everything else. So it's great to talk to everyone. We'll be back next week. And remember that you can download all these tools we have. If you go up here to the top of our rundown, we have a zip file. And if you go into that zip file, it has ELD files. Those ELD files allow you to import into your TradeStation platform a series of indicators. Once you have those indicators in place, then you can use some of these different workspaces. So it's great to be with everyone, and I'll see you next week. Thank you very much.